Welcome, welcome, welcome to the call, guys. My name is Sophia Lightborn. For those of you who don't know me, I'm one of the leaders here at I Am Mastery Academy. And, my goal personally is to help 100 people get to a point where you're earning $1,000 in income, either, from building the business side of I Am or from trading. Okay, so the goal is an extra $1,000 a month. See, before we even dive into this information, I want you to ask yourself, what can you do with an extra grand? Right? What do you call it where you're from? An extra rack, right? An extra band. What can you do with an extra $1,000? See, for me, I understood that an extra $1,000 coming in every month would put me in a position to where I was able to pay off more debt. I was able to save more, and I was able to put myself in a position to have a little bit of cushion. And y'all already know, when you're at a place where you're living paycheck to paycheck, you're robbing Peter to pay Paul, life gets stressful. So if you're positioning yourself right now to make an extra $1,000, guys, and that's not the bare minimum. Some of you guys are going to go on to make $1,000 a day. We've got people in the group who's just been trading with us about 90 days and they're doing $1,000 days. But my goal is just to help you earn an extra $1,000 a month. But it all depends on what you put in, okay? What you put into this, you will get out. So if you're a person who, goes above and beyond, you're gonna make way more than $1,000, okay? If you're a person who's a little, laid back or maybe a little lazy, you may make a little less than that. But you've got to decide for yourself what your targets are gonna be, what your goals are gonna be, because what we're doing here with this opportunity and with this vehicle and with this skill set can really transform and change what your finances look like if you take it dead serious. But if you don't, you're gonna still get the same results you've been getting, guys. So it's all on you. I want you to remember this. Your success and your failure depends on you, okay? You can't blame me. You can't blame your sponsor. You can't blame the person that introduced you to this. We're just the messenger. Your results are solely dependent on you and what you do. So the fact that you took the time out to hop on this call on a Sunday afternoon, it says that you are ready for some type of change in your life. You want to learn this stuff, right? So that's step number one, because the only prerequisite for anything you want in your life is a desire. You just got to want it. And the fact that you're on here today says that you want it. Now you've got to do the work, okay? Remember, the only place where success comes before work is in the dictionary. In real life, you got to put the work in order to see your results show up. And you've got to be consistent, okay? This is not something that's gonna, get you rich overnight. This is not a get rich scheme. If that was the case, everyone would be trading and everyone would be rich. This takes practice. This takes consistency. This takes a commitment, okay, of your time, your effort. And because this is an academy, it does require some money, all right? Y'all already know it takes money to make money. But with what we're showing you here, it's gonna take you a fraction of what the potential that you're able to make. Okay, so what we're gonna talk about today, guys, is Forex trading, how you can get started in the markets and start making some dough, all right? So if you're on the line today and you wanna learn how to make some money in the markets, go ahead and drop a 777 in the chat. My dog is like eating up a pen. Music needs to leave that pen alone. That ink might make him sick. Music, leave that. Okay, I see some 777s in the chat. Okay, y'all ready to get paid. So get your pen, get your paper. We're gonna go through some theory things first. Then we're gonna go through some charting stuff, okay? And feel free to interject in the chat if you've got a question. I'm gonna go through some information. If I see it and we're on that specific topic, I will try to address the question, but I may leave all questions till the end just so we get through the information and we're not on here all day, because I know y'all got things to do. I know I wanna eat. I've got a little cold. I don't have the coronavirus, guys. I just got a cold. The weather changed down here in Florida, so y'all see I'm all, I'm in my winter gear. But let's dive into it, okay? The first thing I want to talk about is super basic. So some of y'all on the line may have a little bit more experience. Some of you guys may know absolutely nothing about Forex, but that's the point of this call, is that it doesn't matter what level you're at. If you are on a scale of 1 to 10, you're a 1, or if you're a 10, you're gonna be able to walk away from this call today with some type of value that's gonna make you a better trader, okay? Or if you're a 1 on that spectrum, you're gonna get enough value to say, listen, I really need to take this thing dead serious. And if you're like a 0, right, you're not even in the academy yet, You may leave here with an interest that, listen, I can do this. This is something I want to do. And whoever invited you on the line, get with them and we can help you get enrolled into the academy today so that you can start trading with us tonight when the markets open at 6 p.m. All right. So guys, the first thing is, what is Forex? Super, super simple concept. People overcomplicate this thing. It's really easy. Every country, guys, has its own form of currency, right? We live in the United States. At least I live in the United States, but I'm from the Bahamas. So in the Bahamas, we got Bahamian dollars. In the United States, we've got the US dollar. You know, I just came from London last week. They've got the Great Britain pound. If we were to go to, you know, China has their own money. Japan has the yen. Every country has their own form of currency. All foreign exchange is, guys, is exactly what it says. It's exchanging one country's currency for another. That's it. So if you go to London, you've got to exchange your US dollars for their money, which is the Great Britain pound. Okay? If you go to Japan, you've got to exchange your euro for the Japanese yen. That's all Forex is. Now, where does the money come in? How does this thing become profitable? See, every currency is traded at something called an exchange rate. So every exchange rate is going to be different. Okay? So here's the easiest way to think about that. Let's just say, you know, this is not accurate at all. This is just numbers I'm throwing out there for example purposes. Let's just say, you know, the US dollar and the euro, right? Or the euro USD. Basically, let's say the exchange rate says that 1 euro, okay? Or let me give it, 1 euro or 1 US dollar is equal to 1.2 euros. That's an exchange rate, 1.2. So that means that 1 US dollar, okay, is equal to 1.2 euros. What would that mean basically if you just think about that? If 1.2 euros is $1, that basically means that which currency is stronger? Is it the dollar or the euro? Just think about it without knowing anything about Forex. Just kind of think about it, common sense. If I've got to give you, if I give you 1 US dollar and you give me 1.2 euros back, that means that the euro is weaker than the dollar. True or true? Because if I give you $1 and you give me a little bit more euro, that means that the dollar is more valuable. That's how the exchange rates work, guys. So in Forex, everything is done in pairs. We call it currency pairs. So you've got stuff like like I mentioned in the US dollar. Reason being is most of us on this webinar today live in the United States and our currency is US. So it's one of the major currency pairs. Remember this, everything that has the dollar in it is a major pair, okay? So all exchange rates are quoted in pairs. Write that down. So you're always gonna see things like Euro USD, Great Britain Pound USD, USD JPY, right? Because everything is in comparison to the next. So think about this. All Forex trading is, guys, is this. It's really simple. The object of Forex currency trading is this. It's to exchange one country's currency for another in the expectation that the price is going to change. Here's what I mean. Let's say today I travel to Japan and I give them $100 US and they give me back $500, 500 yen back, okay? Let's just say that's what happened. I give them 100 US dollars and they give me 500 yen. Let's say I'm there for a week and I spend absolutely no money. And now I'm coming back home to the States. And let's say I go back to the, the little kiosk, the little foreign exchange booth to change my money back because I can't spend yen in the United States. So I've got to exchange the yen that I have back for the US dollar. Now, let's say this time I give them the 500 yen, but instead of getting $100 back, like when I came, they give me back $200. That means that the exchange rate changed for that week while I was there. That means now that the US dollar got even stronger because now that $500, instead of giving me back 100, they gave me back 2. So in trading, your expectation is that the price is going to change over time. And all you want to do is be able to speculate whether the price is going to go up or it's going to go down. If you're right, you are making money. You are in profit, Okay, does that make sense? If that makes sense, someone go ahead and put a 111 in the chat. If that does not make sense, drop a 2 in the chat. That way I know if you guys are following me so far. Okay, the object is simply to exchange one country's currency for another. That's all it is. I want you to think about that. Okay, cool. I see the 111s coming in. So here's how you make this thing even more simple. There's 3 types of analysis when it comes to Forex. This is how you know, okay, so basically you're buying or selling the currency. And this is going to make it super simple for you. When you're trading a currency, you're basically speculating or guessing, using educated guesses to figure out if that country's economy is strong, is weakening or strengthening. That's it. Okay, so think about it this way. I'll just use the Euro USD as an example. Okay, if we expect the US economy to go down, that means that we expect the US dollar to weaken. That means that what you would want to do is you would want to buy the euro. Does that make sense, guys? If you think that a country's economy is going to fall, you want to buy the opposite currency in that pair. Okay, so if we're using euro, I'll drop it in the chat just so you can see it visually. I wonder if I can share, if I can use the whiteboard at the same time. Let me try something new. Can you, oh, that's pretty cool. So let's just say we're going to use this, Euro USD. Let's say this is the pair that we're looking at. And we expect the US dollar or the US economy to go down. If you are trading this pair right here, you want to buy this pair. Why? Because you expect the euro, the currency in the front, to get stronger. Okay? If we expect the US economy to go up, then what you would want to do is sell. Okay? Because now you're expecting the euro to get weaker. Does that make sense, guys? That's what we call fundamental analysis, okay? Write these things down, guys. There's 3 types of analysis. And of course, when you go through the academy, this is gonna make sense. Everything I'm talking to you guys is like the Cliff Note version, just so you can wrap your head around what we're doing, okay? So fundamental analysis, guys, focuses on a country's economy. Write that down. It focuses on a country's economy. That means that things that's gonna matter is like unemployment rates, interest rates at the banks, you know, trade, all of those things matter. It affects the country's economy. So let's just be real. Right now, what are we experiencing in the world right now? China has the coronavirus, right? So right now, China, based on fundamental analysis, based on the news, we're gonna expect China's economy to be going down because no one wants to go there. No one wants any products that come from there right now because ain't no one trying to get the virus, right? Unemployment is going to go up because people can't even come out of their houses. So if you were trading the Chinese currency, you would expect that the Chinese dollar to be going down. Does that make sense? That's how you use fundamental analysis. There's a second type of analysis. It's called technical analysis. And we're going to talk about that in a few minutes. Technical analysis focuses on history. It focuses on price action and patterns that have happened in the past. Technical analysis is when you use those charts that we're going to show you in a second, okay? That means that you're looking at different price action. If price came to this level and stopped in the past, and then it came here and stopped in the past, that's a pattern. So you can actually trade the patterns. That's what technical analysis is. Then you got a third type of analysis. It's called sentimental. And it means exactly what we're saying. It's sentimental. It's about how the market feels. It's about how people feel, right? Right now with coronavirus, people are scared. There's fear in the markets. So you would trade the market based on people's emotions, okay? And each one of these analysis guys work hand in hand with each other to help you make a good trade. This is going to help you to decide if it's a good time to buy or sell, okay? Keep that in mind. So keep that in mind. If a country's economy is weakening, right, you want to buy the other currency. If that country's economy is strengthening, then you want to sell, okay? Keep that in mind. Does that make sense so far, guys? It makes sense. Go ahead and give me some 111s in the chat. Great. I see it coming in. Now, remember we talked about an exchange rate, right? I'll drop one on the screen right here. Let's just say the Euro USD exchange rate, and this is not accurate, guys, it's just for an example, is 1.15382. Let's just say that's what the exchange rate is. This would mean that 1 euro equals 1.15 US dollars. So keep that in mind when you're reading the exchange rates, okay? Is that the first currency, the euro, you just put a 1 in front of that. So let's write it out. You'll be like, you basically read the exchange rate like this. 1 euro is equal to 1.1538 US dollars. Okay? That's how you read what we call, this is called a quote. This is the exchange rate. So this is how you read your quote. Now, remember, we're talking about the fact that we expect that the exchange rate is going to change. Guys, an exchange rate never stays the same. It moves all day long based on news, based on the things that we just talked about. So when the exchange rate changes, okay, we measure the difference between the old value and the new value in something called pips. Okay, you're going to hear that word thrown around all the time. Okay, what is a pip? A pip basically means how much an exchange rate has changed. So let me prove it to you. Let's just say, okay, the exchange rate we're looking at right now is this 1.1538. Let's say 2 hours from now, or when we're done with this training, the exchange rate now changes to 1.1539. Okay, let's say the new exchange rate becomes 1.1539. I'll put it in a different color so it's even clearer. Okay, here we go. Okay, so basically, wouldn't you agree that if our exchange rate is 1.1538 and our new exchange rate is 1.1539, that's a difference of what we call 1 pip. Write this down. A pip is usually the last decimal place in a quote or an exchange rate, okay? The last decimal. So you're always gonna see for most Forex pairs, 4 decimal places. Guys, this is where decimals become important in our life. We've been learning decimal places and all of this stuff in math in school, and it never made sense, right? We never really used it after 2 decimal places because that's what we use in money, right? 2 decimal places. But now in exchange rates, it's quoted in 4 decimal places. Your pip is your last decimal place. So what do I mean? We went from 1538 to 1539. That means that the exchange rate increased 1 pip. Does that make sense, guys? Okay, if that makes sense, drop 1s in the chat. 1 pip. So let's do another example. If the exchange rate changes again and it's now 1545, okay, let's remove that. So if our initial exchange rate was 1.1538, now our exchange rate is 1.1545. How many pips did this exchange rate increase? Just do some math, guys, okay? What's the difference between 45 and 38? Okay, I see some answers coming in. Okay. 7, yes, you guys are right. So right now, this increased 7 pips. Does that make sense? 7 pips. We'll do one more just to make sure y'all really got it, okay? Let's say it's 1. Okay, so here's the new number. What's the difference here in pips? How many pips did this increase? Okay. Arisham Davis, man, Ari, you on point. Your math is on point, or your calculator working real good. Now, Cindy, I see you too. Yes, this is a difference of 38 pips, okay? This is how you calculate pips. Guys, and this is where you make your money in the markets. Because let's just say you had bought, you know, Euro USD at 1.1538. And let's say 15 minutes passes and price fluctuates really quickly, guys. So let's just say after 15 minutes, the price is now at 1.1576 and you bought this currency. You are in profit because buying a currency means that you expect price to go up. This is something good to jot down. If you buy, you expect the exchange rate to go up. If you sell, you expect the exchange rate to go down. See, what's really, really cool in Forex and what we do is that even if price goes down, you still make money if you predicted that it would go down. It's not like stocks, right? Where, you know, if you buy a share in a stock or you buy a stock in a company, you want the price to always go up so you can grow your money. And if price goes down in that company, you lose money. In Forex, guys, in Forex trading, you make money if price goes up or down. That's the power of this thing. You've just got to make an educated guess to know which way, which direction the price is going to move in. So in this example, this difference here in this exchange rate is 38 pips. Now, 38 pips, guys, does not necessarily mean you made $38, okay? It depends on something called a lot size, okay? Lot size. Basically, a lot size determines how much each pip is going to be worth when you trade. And this is determined based on how much money you've got in your account, okay? So if you're starting your trading account with 10 grand, you may be able to play with some big lot sizes. But most of us start our accounts with like 50 or 100 bucks. So we're gonna have to use smaller lot sizes, okay? Here's a quick chart to remember. And guys, remember, this is a bird's eye view. So when you start to go through the academy and you start to go through the lessons on lot sizes, on buying and selling, this course today is just to give you a prerequisite to what you're going to be learning, so those things make a little bit more sense when you dive into the academy, okay? So we've got a couple lot sizes that we use. 0.01 means that you're going to make 10 cents per pip. Okay, so that means that every time price moves 1 pip, you'll make 10 cents. Okay, that may not sound like a whole lot of money, guys, but guys, making money from your phone by pressing some buttons is money, is profit. I say all profits are profit. Okay, then you got the lot size that says 0.10, which means you're making $1 per pip. And then when you got those big boy accounts and you can actually trade a 1.0 lot size, that means that you make $10 per pip, okay? So let's label this a little bit. This is the lot size, and this is your money. Does this make sense to you guys? So based on what lot size you are trading in your trading account, that's going to determine how much money you make when the price moves. So let's just say, guys, in this same example over here, remember, we said that this here is what, 38 pips, right? This is a 38 pip change, or we'll call it movement. Okay, this is a 38 pip movement right here in this example. If you were in your trading account, and I'm going to show everyone how to go ahead and, you know, place a trade on their phone, but let's just in theory, if we use a 0.01 lot size, which is 10 cents per pip, and this price moved 38 pips, how much money would you have made on this trade at a 0.01 lot size? Someone drop it in the chat. Literally, to do the math, guys, all you have to do is multiply the amount of pips. So 38 pips times 10 cents. Boom. Ari, yo, you good at math. What's up? I see you, Shaka. That's what I'm talking about. Yes, this 38 pip move, if you were trading the smallest lot size, and guys, 0.01 is the smallest that you can trade. And for everyone on this line who's brand new, this is what you want to be trading when you first start, okay? You got to trade small because the risk is lower. So your reward, of course, is going to be a little lower. But you don't want to go out here and trade super big, not know what you're doing, and lose a lot of money, okay? Remember, this is a skill set over time. So yes, if you trade 0.01 lot size and you have a pip movement of 38 pips, you just made yourself $3.80. Guys, sometimes some of these pairs move 38 pips in 5 minutes. Sometimes it does that in 5 seconds. Sometimes it takes 5 hours. It all depends on what's happening in the market. But just notice that this is a way for you to be able to make money by understanding some stuff, not for you going out and doing physical labor. This is what's super important to me, guys. And this is why this skill set is so important, is because investing, now you're entering the world of investing. You're now an investor when you start trading. You're basically using your money to go out here and make you more money. You're not using your hands. You're not clocking into a job. You're using your brain and the application of a skill set. That's what's going to change our lives. It's because we've been taught our entire life, we got to work hard to get money. We're learning now in the investing world, you don't got to work hard, okay? You've just got to make some educated predictions based on learning a skill set, and you can make some money, all right? So same example, guys. Let's say you did a 0.10 lot size. Instead of a 0.01, you did a 0.10. How much money would you have made on the same movement? See, the same amount of pips, but the only difference is the lot size is different. So instead of doing 0.01, you went out here and did a 0.10. You just made yourself $38. You're right. And the same thing applies if you did a standard lot or a 1.0, same pip count, 38 pip change, you would have made yourself $380. Tell me that ain't powerful. For the same movement, guys, it only moved 38 pips. Some of the people who are more experienced on this line, some of, like right now I'm in a Bitcoin trade, and Bitcoin in a week could move 400 pips. So imagine if you get a 400 pip move and you're in a 0.10 lot size, you just made yourself $400 without working for it. If you got some big money in your account, you did a 1.0, you just made yourself what? $4 grand. Guys, this is powerful, powerful stuff. But I just wanted you to understand, one, what is a pip, how to calculate the pip, and then what that equates to in money, okay? Now, everyone, if you've got your phone, I want you to pull out your phone. And if you are a part of our team already, if you're already in the academy, you should already have Metatrader 4 downloaded. But I know some of you guys on the line today are guests. And the app that we use to trade, it's called Metatrader 4. I'm going to go ahead and write that here on the screen, okay? Metatrader 4. You can find this in your app store, your Google Play Store. So if you're an Apple, Android, it's available. It's a free app, okay? You can go ahead and download it. I want everyone to download it if you don't have it downloaded already. You want to download Metatrader 4. Now, what this app is going to do, I wonder if I can share my screen from my phone with my computer. I've never tried that before, guys. Y'all know? Trying something new. Let's see. I'm not sure if I can. Yeah, I don't know. But I'm going to show you Metatrader 4 on my computer, but it's basically laid out the same way on your phone, okay? But let me go ahead and bring it up so you can see kind of how the things are set up. Okay, so first thing first, don't get confused. Don't even look at these things yet, okay? Basically, see, I want to show you it a different way, actually. Hang on. I just want to show you 4 decimal places. You can share it on your phone. How do I do it, Pam? Oh, I can. Maybe I should log on to the meeting from my phone. Hang on, guys. Let me see if I can get on the Zoom on my phone, and then I can share my screen, because most people use their phone. Okay, they don't use the computer. So just give me 1 second. If you're new to the call, go ahead and download Metatrader 4. Okay, it's free. It takes a couple seconds. Okay, let's see. Share my screen. Zoom. Start working. And someone in the chat, let me know if you can see my screen. Okay. Oh, this is cool. All right, cool. See, I learned something new today, guys. Okay. So Metatrader 4. This is the app right here. Okay. Now, this is how your app is going to look. If you look at the bottom of your screen, you see where it says quotes, chart, trade, history, settings, okay? Quotes is where it lists your pairs and it shows you the exchange rate. So the first few on my screen is like Bitcoin and different things that I'm looking at. But for this example, we're just going to look at Forex, okay? So I'm going to move it down to Euro USD, which is the one we've been talking about, the top one. If you guys can see it, go ahead and let me know in the chat. Give me a thumbs up or something if you can see Euro USD at the top of my screen. Perfect. All right. So guys, Euro USD, you see it shows you two numbers, okay? One is called the buy price and one is called the ask price. The only difference between them, guys, is that if you want to actually buy the currency, the price is going to be the price on the left. If you want to sell that currency pair, you actually use the price on the right. And if you look at them, it's literally like 1 pip difference between them. It's nothing major, okay? But for the case of this example, I want you to look at the quote. You see how it says 1.1289, and then it has that little 9 at the very top? Your currency pairs are quoted with 4 decimals. That 9 that's at the very top that looks a little bit smaller than everything else, that's a fraction of a pip, so that's called a pipette. You're new, don't worry about pipettes. Let's focus on pips. So ignore that little number at the top for now. You only want to look at your 4 decimal places because that's what's going to show you what's happening with your currency pair. So I'm going to actually go ahead and log into my demo account so I don't do this on my real account and lose my real money. All right. But let's look at, but I'm going to go to the same pair, Euro USD. You see it at the top, right? So with this pair, let's just say, I'm not looking at no analysis. I'm just showing you guys how to actually place a trade, okay? If you click on that pair, you see you get some options pop up to the bottom. You can look at the details of the pair. You can look at a chart of the pair, or you can trade the pair. For right now, I'm just going to show you guys how to place a trade. I'm not placing it based on any analysis, so I'm going to go in the negative and lose money in this demo account because I'm just showing you an example. So you literally click trade. Write this down, guys. There's basically 4 parameters you need, 4 or 5, let's say, you need to place any trade. The first thing you need is to know which pair you're actually trading, okay? You want to choose the pair that you're going to trade. The second thing is you've got to decide on a lot size. Remember, we just talked about lot sizes. Everyone, guys, for the sake of this training, because everyone on this training is new, use a 0.01 lot size. That's the smallest lot size that you can use while you're practicing, while you're learning, okay? So the lot size is at the top. You see where it says 0.01? If you wanted to increase that, you can literally press the buttons next to it to increase the lot size. Or you can click on it, erase it, and type in whatever lot size you want. So you can do 0.01. If I wanted to do 0.02, that's up to you, okay? But for our risk management purposes right now, let's just use 0.01. Keep this in mind. Let me see if you guys can make a guess. If 0.01 is 10 cents per pip, what is 0.02 going to give you per pip? Just take a guess. If 0.01 is 10 cents per pip, 0.02, yes, is 20 cents per pip. So that means if you were trading a 0.03, now you're doing 30 cents per pip. So just common sense shows you the larger your lot size, the more money you're able to make per pip. Okay, cool. So you've got to choose your lot size. Right now it's going to be a 0.01, but as you get more advanced, as you get more confident in your trading skills, of course you're going to start to increase your lot size. Because your goal eventually is to get to 0.10, right, which is $1 per pip. But that's after you've grown your account. So you need to know which currency pair you're trading. You've got to know what lot size you're going to use. Then you've got to know if you're going to buy or sell. You've got to make that decision. Is price going up or down? If you expect price to go up, you buy. If you expect price to go down, you sell. So you literally press the button buy or sell, okay? Now there's two other parameters that's super important. You can place a trade without these. I don't recommend it, okay? The first is your stop loss. The second is your take profit. Here's what these things mean. I'll start with take profit. That means that what price do you want to take profit at? So basically you can say, listen, I want to take profit when I get 38 pips. So you do the math based on where price is currently at, and you say, okay, when price gets to this threshold, I want to take my profit. Get me out the trade, give me my money, okay? Stop loss means that's what's cool about Forex, guys, is people always think that investing is risky. There is a level of risk, but the biggest risk is when you don't know what you're doing. What a stop loss does is it's a built-in parameter that's built into, your trade that says, I am willing to lose this much. If price goes the opposite direction that I expect it to, and it hits this threshold, close the trade out. I don't want to lose more than that. So here's what I mean. Let's say you're placing a trade, you're tracing a sell, right? You say price is going to go down, and you press sell, and price starts to go up. It goes in the opposite direction. You don't have to continue losing forever. You can say, listen, I'm only willing to lose $2. If I get to a point where I'm losing $2, get me out the trade. I'm cool with losing $2. But your take profit may be to make you $10. So you're basically willing to risk 2 to make 10. That's called risk to reward ratio. You always want to have a certain amount you're willing to risk, but of course you want to make sure your reward is at least, double your risk. Does that make sense? So guys, this is what's really cool about Forex, is that some people think if you place a trade and it goes the opposite direction, you just lose everything. No, you set the threshold that you say, listen, I only want to lose this amount, then get me out the trade. Guys, it does it automatically for you. So now you're not glued to your phone. We got life. We got to go to work, right? We got to go to class. So you place your trade, you literally place your trade, set it, and forget it, okay? Powerful, powerful stuff. So this is how you place a trade. So I'm going to do it for you just for example purposes. So I'm going to go to Euro USD. I'm just going to look at the chart. So this is what charts look like, okay? Basically, these bars represent what is happening with price. So if I look at this right now, you see how it's the red, it's going down? That's showing that price is going down. So because it's going down, guys, I'm just going to say, okay, price is going to continue to go down. This is based on no analysis. This is just a guess for this example. So what I'm going to do now, I'm going to go to trade, and I'm going to sell because I think price is going to keep going down. Here we go, sell. Well, the market is closed, right? Because it's not 6 o'clock. So what I'll do is I'm going to do it with Bitcoin. So remember this, the markets are closed on the weekends, okay? So right now with Forex, you cannot trade until 7 o'clock p.m. The markets will reopen, okay? Then it's open until Friday afternoon, okay? So let's do Bitcoin because cryptocurrency, Bitcoin is 24 hours, 7 days a week. So I'm going to go Bitcoin, same principle applies. I'm looking at it. Bitcoin has been, if you look at the red, Bitcoin has dropped a lot all day. So if you had sold Bitcoin from about this place right here, and you sold it and you said price is going to go down, you would have made a lot of money because you see it dropped all the way down here. But right now it's starting to consolidate, it's starting to go back up a little bit, right? So I'm just going to say Bitcoin's going up. Okay, that's my educated guess. I'll say Bitcoin is going to go up. So I'll go to trade and I'll just buy it. Boom. Okay. Now, if we look at the trade column, you can see right now I'm losing money because based on where it's something called a spread. So even though that's a little bit more than I want to talk about today, but if you basically look at where that white line is on my screen, that's where it shows that I actually bought. Okay. So I'm expecting price to go above that line. So whenever these candlesticks go above that white line, I'm going to be in blue. I'm going to be in profits. Right now, it's underneath that line, so I'm in the negative, okay? It's showing that I'm losing money, which is cool because I'm not expecting this trade to close right now. I can ride this for the whole day, but my prediction is price is going to go up, okay? So just keep that in mind. This is how you place a trade, guys. You're literally predicting if price is going to go up or price is going to go down. That's it. If you're right, you make money. If you're wrong, you lose money. Does that make sense? If that makes sense to everyone, go ahead and give me a thumbs up in the chat, or drop a 111, since thumbs up is a little harder to find, on your phone. Now, the key, guys, is you want to demo trade. Like I'm saying right now, I'm in my demo account, okay? I have a real account. If you look at my real account here, I start every Monday with $100 in my account. So if you look at my real account here, you'll see I got $100, and I'm in a Bitcoin buy actually in my real account. But like the same thing, if I look at my chart, that white line is where I'm saying I expect price to go above it. Right now, price is below it, so I'm in the negative. But as soon as it breaks above that line, I'm gonna be in the numbers over here on the right is gonna go from red to blue, and I'll be in profit. And at any point, I can either close my trade with the profits that I have, or if you look at on my screen, you see where it says stop loss SL and my take profit. That's because I've already set my parameters. I expect Bitcoin to go up to 8,700. If you look at the price right now, the first number on the left is the price that I entered the trade at. The one on the right is what price is currently at. So if you look at it, price is currently at $82.99. I expect the price to go to 8,700. That means I expect, right, this price to go up about 500 pips. I don't expect it to happen today. I don't expect it to happen in the next 10 minutes. But I'll be cool if within this week, price hits 8,700, I'll be up 500 pips, guys. And I'm at a 0.02. So that means I'm making 20 cents a pip. So let's do the math. If my trade plays out at 20 cents a pip with and I'm expecting a 500 pip move, how much money do I expect to make? If my trade plays out, how much will I earn? 20 cents times 500. Yep, this is a $100 trade right here. It's cool. I don't care if I have to wait all week or for 2 days. It's cool. That's $100 profit. Okay. So guys, this is the power of this stuff. And I have those two parameters set. So I literally don't have to, what if something happens right now and it shoots up and hits 8,700 and I'm out, getting something to eat or walking my dog. I'm not looking at my phone. It's okay. I have it set there so that the app will automatically, as soon as price hits that number, it's going to close out my trade and I'll have $100 I just made in profit. And guys, the cool thing about Forex is you can withdraw your money at any time, okay? You can take it every day if you want. I usually withdraw on Fridays. And then I start my account fresh every week with $100 so that every week I can see what I made, I would draw $70, $80, $200, whatever it is, okay? But this is the power of being able to make money from your phone, guys, okay? This is what we're able to do. So this is the trade that I'm currently in. And I'll update you guys on my Instagram in a week or in 2 or 3 days and let you know if it took profit or let you see how close it is to where I'm at, all right? So cool, good stuff, good stuff. Is this valuable so far? Okay, we got about 15 minutes more and we're done. Okay, has this been valuable so far for you guys? Let me see, how do I turn off my share screen now? Okay, did it stop? Okay, cool. All right, so I see you guys are saying that this is valuable. You're getting some good information. Awesome. So here's something I just want to give you guys as a quick, something called a pip map, just to help you calculate pips when you're looking at the difference in the exchange rates. Okay, is this, let me erase everything. Can I clear the whole thing? Clear all drives, poof. Okay, so let's just look at this, 1.15382. Okay, basically, this here, the last number is your pipette. Okay, remember, we can basically ignore that for right now. We only want to focus on the first 4 decimals. So right now, your final decimal, this will be 8 pips. Y'all remember back in the day when we did tens, ones, hundreds place, thousands place? This is where this comes in. So your final number is your pips. The number before that is going to be 30 pips. The 5 would be 500 pips. This is how you calculate your pips really quickly. The 1 would be 1,000 pips. So when you're looking at value differences, if only that last number changes, then you know you're in a single digit. If the second number changes, then you're in the tens, okay? So this is just something to help you to kind of be able to see how many pips you can estimate pretty quickly, okay? But I can see that from our example earlier, you guys all understood how to calculate the pips. Now, everyone should have Metatrader downloaded on their phone right now. Now, you want to make sure that you have a demo account created. You can use any broker that you'd like. Here are some of the ones that I recommend. Literally, you go to these brokers' website, you click on create a demo account, and you can go ahead and do it. It's super simple. It takes literally a minute, okay? You can also create a live account. Live accounts, guys, are accounts with live money, your real hard-earned money. So you don't want to start trading live until you're ready, because you want a demo to learn. You want to practice in your demo account so that when you make your mistakes, you're not losing your actual money, okay? So here are some brokers. So here are some brokers, okay? Brokers. Hugo's Way, okay? Hugo's Way is great for cryptocurrency, okay? Another one is KOT4X. That's the broker that I personally use. You've got FX Choice. If you're from like the Bahamas or you're not in the United States, this is a great broker for you, okay? You got Trader's Way. Trader's Way does not allow you to trade cryptocurrency. So the ones that I really recommend are Hugo's Way, KOT4X, and I'm biased because I'm from the Bahamas, so I'm sure I got some people from the Bahamas on here today. FX Choice is for if you're in the Bahamas. Now, when you create a demo account, it literally takes seconds. It just makes you create an account just like if you were creating a social media account, and that's it. If you want to create a live account, there is some documents that are that you need to have verified just to make sure that you are who you say you are. So they're going to ask you for like a license or a passport and maybe some type of address verification just to make sure that you're a real person opening this account, because this does require real money. Typically, it takes about 24 hours to get your broker account verified, and you can actually start funding your account with live money. Here's something to note. Most accounts require you to fund it with Bitcoin, okay? If you're in the United States, you can use Cash App. It's the easiest way to fund your account because you can buy Bitcoin in Cash App and just transfer it straight into your broker account, okay? I'm gonna do a video with screen share on how to do that. Get with your sponsor, get with me personally. I'll be happy to help you get your live account created and show you how to fund your account. Everyone who's brand new, I would say don't fund your account with more than $100, okay? $50 to $100 is suffice for you to start getting your feet wet in the markets, all right? Now, here are 3 tips I just wanna give you guys. And then I'm gonna hop on the charts really quickly for like 5-10 minutes, and then we're done. I appreciate you guys for staying here with me. Here are 3 things I want you to realize about trading. See, I couldn't do this without sharing this. There's 3 facts about trading, okay? I'm gonna step outside because I got someone coming over to the house for something else, and I know they don't want to listen to me talk about Forex, even though they should, right? So hang on, guys. I'm going outside. 1 second. Okay, cool. See the power of working from home, guys. I'm able to, talk to you guys all over the country. Some of y'all in other countries from the power of my computer. Once you have an internet connection and you've got a device, you can get paid. Okay, that's what this whole thing is about. That's why this thing is so powerful. That's why I'm so passionate about it. Is because you don't have to clock in, okay? And this is something that's gonna make you self-sufficient, because if you learn this stuff, you can get paid all day long. If that don't get you excited, y'all, I don't know what will, okay? But here's 3 facts I want you to write down. Things I want you to remember about trading. The first thing is you will lose some trades. You're not gonna win every trade, so you're gonna lose some money. It's cool, accept it, understand it. You're not gonna win 100% of the trades. If you do, then I definitely need you to WhatsApp me, because I need you on my phone so you can send me every winning signal you have. okay? But I just want you to know you're gonna lose some trades. You will. It's a part of the process. You're gonna win some. You're gonna lose some. Expect that. So if you lose, don't be in your feelings. Don't be upset. Don't say I'm never trading again. I'm telling you now that you will lose some. Second thing, only trade what you can afford to lose. So that means don't trade your rent money. Don't trade your car note money. Don't trade your last $20 and then you can't eat. Because what if you lose? All right? Only trade what you can afford to lose. Now, I'm not saying that I expect you guys to be out here just losing, but it's a part of the process. You're going to lose some. And most times we lose because of lack of discipline. I'll be transparent with y'all. Since I've been trading, I've been winning. But every time I've lost, most times, wasn't really because it was a bad trade. Most times it was because I wasn't disciplined. Most times it was like I was being greedy, right? I would get into a trade, be up 40 bucks, get out the trade, and instead of me stay out of the trade, I'm like, let me get back in for 20 more, and then I lose 60. Lack of discipline, okay? So only trade what you could afford to lose. And the third thing, and I mentioned it before, Forex is not a get-rich-quick scheme. It's not. This is a process. This is a skill set, okay? This is a skill set. If this was a get-rich-quick scheme, everyone would be millionaires. They're not, because it takes practice. It takes experience. There are no shortcuts. The quickest way to blow your account and lose your money is to try to take shortcuts. Promise you. So just kind of know that. It's a process. This is something that you have to learn. That's the reason why we have the Academy, is so that you can actually plug in and learn, okay? You want to learn so you can earn. I tell people all the time that the word learn, if you look at the last 4 letters of the word learn, it spells earn. That means that everything that you learn, you have the potential to earn it. Not just in Forex, in life, right? If you learn how to fly a plane, you've got the potential to earn as a pilot. If you learn how to cook, you've got the potential to earn as a chef, right? If you learn numbers in accounting, you have the power to earn as an accountant. So the same thing is here. If you learn this skill, if you learn how to trade, guys, you now are giving yourself the potential to earn as a trader. Think about it. Every single bank in the world hires traders to trade the money that's in the banks. They pay them 6 figures. Now you have access to the information so you can trade for yourself. If that's not something to get excited about, I don't know what is. All right. But for the last 5 minutes here, I just want to show you guys how you view charts, where to view the charts. And this is where you should be spending most of your time, on the charts. So the way you see the chart is on a website called tradingview.com. Okay. Tradingview.com. Ari, I don't think there was a 4. 1 was you will lose some money. 2 is only trade what you can afford to lose. And 3 is Forex is not a get-rich-quick scheme. It's going to take some patience, practice, and endurance, and experience, okay? Now, you can view charts on tradingview.com. It's a free site, guys. That's what makes it so cool. All the tools we need to be able to trade are free. Metatrader 4 is free, okay? TradingView is free. You can create a free account there. And I'm going to go there right now, okay? I'm going to share my screen. Here we go. I'm going to go to tradingview.com. Okay, here we go, tradingview.com. And you can literally, if this is your first time here, see, it has me signed in. So you can see it says, I am the lioness. But usually it'll say, create an account, sign in or log in, sign in or create an account or sign up or something. Let's see, I'll log out so you guys can see. So this is usually how it looks. And you can go join for free to create your account. I would encourage you guys to create an account because it saves your chart. So when you start to like mark up charts and put, you know, your markups, you want to make sure you're in your account so it saves it. So if you go walk away from your computer or you pull it up on another computer or another device, you can see all of the lines that you drew before. Okay, and then you go ahead and sign it. So let me sign back into my account really quickly. Once you're signed in, you literally click the button here that says chart, and it's going to take you to the charts, and then you can pick which chart, which currency pair you'd like to look at. And just for today, I'm just going to use Euro USD because that's what we've been talking about all day. All right. So hang on a second. It's kind of slow now that I'm outside. So clearly this chart that you're seeing on my screen right now is Bitcoin, right? Because I'm in a Bitcoin trade. I had to mark up my charts before I actually placed that trade. That trade was not just random, it was based on some analysis, technical analysis. But let's look at Euro USD. Okay. So here's the Euro USD chart. I'm going to clear it. So as you can see at the top right, it says the market is closed. So right now you're not able to place a trade because the markets aren't open, but you can definitely look at your charts and make some analysis. So remember guys, I said that technical analysis is based on, you know, patterns. You've ever heard the saying before that history repeats itself? The market repeats itself. So usually what you want to do is you want to look at your chart and figure out the direction of the chart. Write this down, guys. Charts move in 3 ways. Price moves in 3 ways. Anytime you look at any chart, it's either in 3 movements. 1, it's either in an uptrend, which is like this. Price is going up. It's in a downtrend, which is like this. It's going down. Or it's moving sideways, which is like here. This is a good chart. It had all of my examples in one, right? So if we look at it, right here, price is moving sideways. It's kind of like, we call that consolidation. In this section here, price is moving down. And in this one, price is moving up. Is that clear for everybody? Do you all see that? Let me know if you all see that. I don't want to assume that y'all feeling me. Okay, let's see. Chat. Okay. Yes. Okay, cool. So that makes sense. So remember that prices, the charts are either moving sideways, downtrend, or an uptrend. You always want to identify that first when you're first looking at a chart, because that's going to allow you to figure out which way you should be trading. See, if price is in an uptrend, that's saying that you should be buying. If price is in a downtrend, that means that you should be selling. If price is in a sideways chart, that means that you shouldn't really be trading yet because you don't know what's happening. Okay? And guys, like I said, this is a bird's eye view. Don't just go look at charts and say, oh, this looks like it's in an uptrend, I'm buying. No, it's other things that are basis for your analysis or for what you're going to do. But I'm just kind of giving you guys, you know, the very basics in a really short time frame, okay? Now, in TradingView, these are your charts. There's something called time frames. You see where this says D at the top? I'm looking at the daily time frame. So that means that each one of these little blocks that we call candles represent 1 day. So that means that this one right here represents the last day the market was open, which was Friday, right? This would have represented what happened on Thursday, Wednesday, Tuesday, Monday. Does that make sense? So once the market opens today, a new candle is going to form that's going to show you what's happening today, okay? You don't have to only look at the daily time frame. There's 4 hours, okay? You can see that the charts look a little different based on the time frame, right? Look at this. Now that we're looking at a 4-hour chart, there are more candles because now each candlestick represents a 4-hour block of time rather than a day. We can go down even further and look at an hour. Guys, we can go down to the minute, okay? But what you want to do is you want to keep these few time frames in mind, and then we're going to stop here for today, okay? You want to look at the daily. You always want to look at your daily time frame so that you can see a bird's eye view of what happened over the last few weeks. If you look at these 3 sections that I have marked up, you can see that this right here shows you since the end of February up to now, because each one represents a date. Today is only the 8th of March, okay? So you want to look at the daily time frame to figure out, hey, is the market out going up? Is it going down, or is it sideways? Looking at this, we can say the market is clearly going what? Up. Then what you want to do is you want to go to the 4-hour time frame. And you want to look for some patterns, okay? These are called support and resistance. I won't go into that today because it's just going to be too much for right now. But just know that you always want to start with the highest time frame so you can see what's happening in the market. Then you want to always dial in a little bit, you know, smaller time frames to see what's actually happening. So remember, history repeats itself, right? So let's do this. I'm just going to show you guys support and resistance. Support and resistance are basically key levels that you're going to find basically on the 4-hour time frame, okay? You want to find levels where price approached but didn't go past, both at the top level and the bottom. This isn't going to make sense, right? Until I draw it. Here we go. I'm going to draw a line. Basically at levels where price approached several times, and those are going to be called key support and resistance. So just looking at this from a quick glance, right around here stands out to me immediately. Why? Because look, price approached this line, then it went down. It approached it again, went down. It approached it again, it broke through a little bit, but went down. Approached it again. Does that make sense to you guys? Do you see how this line I just drew, price approached the line several times? That shows that this is what we call a ceiling. It's a resistance, okay? Price approached it, but usually when it approaches that level, it goes down, goes back down. Same thing here. If I draw a line about here, check this out. Price approached this line, it broke through here, but it went back up, approached it, went back up, approached it, broke through a little bit, went back up, then it broke it, came back up, it did its thing, approaches it again, approaches it again. So basically what this shows you guys is that when you identify these key levels, let's just say, for instance, right around here, let's say this is where we were in real time. Let's say we didn't know what was going to happen, but we're looking at this chart and price came here, it approached the line, it went up, comes back down towards our line, and it's here. What do you think is going to happen because of what happened in the past? Now that you know that price has approached your line, it typically doesn't break it, it goes back up. So this would be an opportunity where you could place a trade to say, hey, price is getting close to my support line, it's probably going to bounce up, okay? That's a really, really simple version of looking at it, but there are other factors, okay? But just think about that. Usually when price gets to this line, it bounces up. But like you see in this instance, it broke through it. It broke through it. But when it came here, it didn't break through, it went up. So you could have placed a trade that price is about to go up. It went up, you would have been in profit, okay? I don't want to go too deep into that because I don't want to lose you guys. But just know that there's support and resistance on every chart. And usually when price approaches that line, it goes in the opposite direction. Every time it approaches that line, this is key opportunities for you to place a trade to be profitable. Okay, does that make sense? Just up to that point, does that make sense to you guys? Just a little bit. 111 if it does, 222 if you're like, nah, Sophie, this is gibberish. Either way, it's cool. Okay, so some 111s are coming in. Okay, cool. So make some sense. But guys, here's what's important. If you're on the line and you are a new customer, you're already enrolled in IM Academy. The Academy teaches you about all of these things we talked about in detail. I just gave you the Cliff Note version. The Academy gives you like 1 hour lessons on each topic that we're talking about in the boot camp, okay? What you wanna do is you wanna make sure you navigate to the Academy and access this. And that's the last thing I'm gonna show you guys how to do. If you're watching this video right now, if you're on the session, oh, my dog's trying to come outside. Guys, hold on. If you're on the session today and you're not a part of our Academy yet, you're not enrolled, get with me, get with whoever invited you to the line today, get enrolled in our Academy. It's literally, before now, guys, to get access to, Forex training would cost you $40,000, $50,000, which most people can't afford. That's why this was like almost reserved for only rich people, because only rich people could afford to get this education. But our Academy has changed that. You can actually start to dive into our Academy. You can enroll with our Academy for only $235, and then there's a monthly tuition of $175 a month. I don't want you to get scared about that. Why? Because think about how many times you go out to dinner or go out for drinks and spend $200 in a weekend, okay? But here's the key. What we're teaching you, what you're gonna learn in the Academy is gonna put you in a position to make $200 every day. So don't look at the $200 investment as a lot, because you're putting yourself in a position to learn how to make that over and over and over again, all right? It's an investment. I tell people all the time, I don't want you to think about this as spending money. When you spend money, your money ends. When you invest money, you expect a return. So you're going to be invested in yourself, invested in your mind, invested in a skill set that's going to teach you something to put you in a position to make money. Every time we buy shoes, we buy clothes, we buy food, we buy drinks, it doesn't bring us anything back. And we spend it all the time. Now you have an opportunity to spend a couple dollars in yourself to learn a skill set to help you grow your money for the rest of your life from the comfort of home. So if you're not yet in our academy, get with one of us. We'll be happy to help you enroll so we can get you going and get you learning so we can also get you earning. Okay? So final thing, guys, before we go, if you are in the academy, here's how you access the academy. Okay, you should know how to do this already, but I don't like to assume because they say when you assume, you make an ass out of you and me. Okay, that's what the word assume says. Okay, look at it. A-S-S-U-M-E, ass, you, and me. Right? That was a joke. That was corny. I know. But here's how you access the academy. You go to im.center. Okay, im.center. It's going to bring you here. You're going to log in with your username and password that you created when you enrolled. It's going to take you right into our platform. Okay, give it a second. And then you literally go here and you scroll down to academies. You click academies. You find your language. You'll go to Forex Academy English. And now you've got a ton. You click enroll, or you can just look at the series. What I encourage most people to do, get through your 100 series. That's your basics in your first 2 weeks. You can do it. You click here, and now you've got all of these videos that's going to teach you everything you need to learn. See? What's a pit? Buy versus sell. Lot sizes, pending orders, 3 types of analysis. You know, how to enter a trade on your phone, how to calculate your stop loss. You know, these are the things that you're going to learn. So you want to make sure you plug in to the academy as soon as possible. And our academy takes you from the very basics straight through the advanced. Okay. See, this teaches you about trends, support and resistance, pullbacks, Fibonacci, candlesticks. Guys, everything you need to be a profitable and consistent trader is in this academy. You've paid for it. Dive into it. Treat this academy like you paid 50 grand to get this information. Don't treat it like $200, y'all, because this is going to put you in a position. I've got people in our group, guys, who've been trading less than 90 days who had consistent $700 days last week. You know, we had one of our teammates, Miss Griffin, Miss Anita Griffin. Her birthday was on Friday, and she ended the day with $1,100. She's been trading 90 days because she's plugged into the information, okay? So this is how you access the academy. Another tool that you want to make sure you access immediately as well is called Go Live. So you access it right here under Academies. You see Go Live. It's going to take you to our Go Live platform where you're actually able to see live educators trade live in the market, and you can watch them, okay? So one of my favorite educators is Miss Kim Torres, okay? You literally click on the educator, and it takes you right to their sessions. If they're live at the time, you watch them live, and you're able to chat live just like we're doing on the Zoom. But if they're not live, you can actually watch back all of their pre-recorded sessions. They're all saved. So guys, what I want to encourage you to do is 2 things. Get going in the academy. Find an educator that you like and get on their sessions at least 2 or 3 times a week. It's going to speed up your learning curve. Each educator has different products that they use. Find those products and start using those products, guys. It's powerful, powerful stuff, okay? Get on the sessions. You're not going to learn this stuff if you don't plug in. The same way you plugged into this call today, plug into the academy, plug into the educators. You're going to start, it's going to start to make sense. And you're going to be like, light bulbs are going to go off and you're going to start to get paid. Trust me, okay? Trust me. The final product I want you to, everyone sleeps on and we don't talk about enough. And I promised I would talk about it today. And it's something that everyone gets as a part of the academy. It's our most profitable tool. It's called the Harmonic Scanner. This tool allows you, while you're learning, right? We know you're new. You're going through the academy. You don't really know what you're doing yet. But this tool gives you trades that you can literally copy and paste the numbers and be able to make money while you're learning. Okay, so I'm going to show you that, and then we're done for real this time. So here's how you access the Harmonic Scanner. It's im.harmonic. Harmonics. that live. It's harmonics.im. Okay, harmonics.im. You log in with your username and password. So guys, if you're not in the academy, you won't be able to access these tools until you enroll. Log in. It literally brings you to this tool right here. Okay, basically what it does, I'm going to just show you all really quickly how this thing works. Check this out. Check this out. I didn't mean to do that. Boom. Okay, so it literally shows you the currency pair. So let's just say right now this is GBP, Great Britain Pound, Japanese Yen. Okay, I can zoom out. And it literally scans the market and creates a pattern to show you where to enter and exit the trade. So look at this. All you do when you look at the Harmonic Scanner, it shows you what your entry point is. Guys, it says entry, okay? So it's showing you that if prices around this point to sell, okay? It shows you your take profit to put in your scanner and the stop loss. Remember the parameters you need for a trade, entry point, stop loss, and take profit. It literally gives it to you. So now you go on this, you look here, you're like, okay, prices around here, sell. Set your take profit, set your stop loss, you make your money. Okay, guys, get with me, get with your sponsor. We're gonna do a full Harmonic Scanner training. They do tons of them all week long. Get on one of the educators. If you go live, you can literally go live. It says pick a channel and you can look for basics or harmonics. You click harmonics and it's going to show you educators who actually teach you how to use the scanner. So you look, it's a schedule. So today is Sunday. There's no one who teaches on Sunday, but tomorrow at 9:30 p.m., this guy is teaching you on harmonics. On Tuesday at 9 p.m., this guy is teaching you the Harmonic Scanner. 9 a.m. tomorrow morning, Manny is teaching the Harmonic Scanner, okay? So guys, this is powerful, powerful tools that you have at your fingertips, but a lot of you guys are just not using, okay? So before we get out of here, let me ask you something. And I think I've asked all of you guys this before, but I just want to reiterate it, is that think about the money that's passed through your bank account in the last 5 years. From your job, from gifts, money you've made from your business or your side hustle. Just think about all the money you've made. How much money has that money made you? Most people say none. See, because we've been taught, guys, to make money and spend money. We've been taught to buy stuff all day long and then go to work for more money to buy more stuff. That's not how you get wealthy. The way for us to get free, the way for us to start to build wealth is to learn a skill set that can help us to multiply our money and grow the money we already have. Because believe it or not, you're making money. You got money. You're just putting your money in the wrong places. You're putting it in shoes. You're putting it in your clothes. You're putting it on them drinks and some food. When you could be putting that same money into your trading account, learning how to trade, and have that $100 you deposit become $1,000 by Friday. That's power. That's freedom. That's how we can start to change not only our lives, but help a lot of people change their lives in the process. So guys, let's take this thing dead serious. The skill set, y'all can tell I'm already passionate about. And my goal, like I said, is to help 100 people in 2020, earn $1,000 a month extra outside of what you're doing from your job, outside of the money that you're making any other way, but in this market, through this academy. And it's possible, and it's already done. So guys, I hope this was valuable, man. If it was, Pam, before we get off, if you could just do me a favor, Pam, lovely someone, I never do it. If you guys could just take a screenshot of this live so that I can post it on my Instagram to show that we've been working today.
I already did, so.
Appreciate you. You know I never do it. And guys, if this was valuable, do me a favor. You know, you guys took time to hop on. I took time out to get on. If this was valuable, you know, definitely post something on the gram or on Facebook, tag me. Let's share this information with people because each one reach one, each one teach one, and it starts with us. We can't be selfish with this information. You know, as I get better as a trader, I'm gonna be sharing it with the whole world because this is what's gonna set me free, set my family free, everyone I care about free, and you guys should feel the same way. So I appreciate y'all for hopping on, man. God bless. Enjoy the rest of your Sunday. And if you are in the academy, 9 p.m. tonight, we have our mentorship call that we have every Sunday night. Make sure you are on. And next Sunday, same place, same time, all of your new customers that we enroll in this upcoming week, have them plug into this call because it's going to set the foundation for their trading future. All right. God bless. Y'all have a good one. And I'll talk to y'all soon. Peace.